Here we go. We're going to talk about the OEX. Why is this important? Because this is the S&P 100 index. We have to take a look at it as of 11/10 of 2012 because the major stocks that are in here, you can classify some of them as multinationals in this index. It is the top 100 companies, period, in the U.S. And we have a problem. You got Apple in here, Amgen, Amazon, Baker Hughes, Costco's in here. I can go on and on. A lot of your leadership that is based on the U.S. economy, these are the top 100 companies. And it's very important to know that on this weekly chart that I'm going to show right here, right now, is that this is the calendar 2012. This is last year. The markets have been selling off dramatically. This is a very, 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 very important index. It is a leader of this country because that's why it's called the S&P 100 index. I am in a bear reversal because I have closed 1, 2, 3, 4 weeks below the 10-week. That's the blue line. The 10-week is getting ready to cross over. I've sold down through the 20-week simple moving average, coming to the 50-week moving average on this index at 621.99. Now, we will draw a trend line very quickly here so that people are updated. You can see right here that last year we were putting the bottoms in and we were selling down hard in November and December. One of the things that you want to be mindful of is that we got that big rally last year that started the January bull with the correction in the S&P 100 with another 5-year or 5-year highs up in here. And now we've had 1, 2, 3, 4, 5 weeks coming to the 20-week. When we look at broader markets, we look at lots of sectors, lots of indices, but we look at the leadership. The problem with the bull is having a problem. There's a new election. It's over with. The thing about it is this is broke. These support levels at the 50-week and the 100-week, which is down here at 595, that means that there's a lot of names that are leadership names in this particular index. When those are breaking down, because this particular weekly index is a combination of every one of these stocks. Now, you got ExxonMobil in here, you got Verizon in here, you got UPS in here, you've got Oxy in here, you've got plenty, you got Qualcomm, that was a leader during the earnings that it just did. You got Schlumberger, SLB, SLE, Sara Lee in here, you got Target in here. These are the companies that have the biggest market cap. That's why it's called S&P 100. And they all fit in the OEX, called the S&P 100 index. Now that you understand it, you can see that we're clearly broke if we sell through that 50-week moving average. And I will draw a trend line slightly right here. There is where the major support level is going to come into play on Monday. If we break that, this is where the last correction was. We do have some support levels right here that is very clear. This is going to be your next support level. And then we have the 100-week moving average at 595. People need to be aware that until you're back above these things, that this is what we call from a bull rally to a bear reversal. Because we're not traveling above the 10-week moving averages. No, we're not. We're below them now. That's where turns happen now. So you got to trade above the 10-week. The 10-week's got to rise. The 20-week was rising. It's not a total catastrophe because we're going to be watching this thing on a daily level. It's because if we go into a weekly sell signal here, these indexes could come all the way back down and break these lows. So, once again, fiscal cliff, uncertainty, taxes, all kinds of things that are going on in government right now. New election has caused the markets to sell down. Therefore, this particular index and these names that are in this 100, I mean, you got the big leaders in here now. The thing about it is the earnings are not as good. Growth is anemic. So, once again, what happened over here in this bull rally a year ago? 1 year ago, we just went straight up, and then we had to correct, and then we went up and made higher highs here. So, as we close out this year, and we go into calendar 2013, that first quarter, all the way out until June of 2013, if we go off that fiscal cliff, you're going to go much lower in these names. And the thing about it is, they were on sale before a year ago when we were going through the European austerity down here, and that was a wonderful move. And another wonderful weekly breakout from every one of the retracements that we had. But I will tell you that the bull will not be bull without getting back above the 20 and the 10-week moving averages, selling increases below the 50-week and test the 100-week down here. This is a very crucial update. It is a calendar 2012 S&P 100 index update. Mutual fund managers, pay attention. Hedge fund managers, you better be paying attention as to what side of the markets and how you're going to address capital risk moving forward.